Ryan punt. Alright, we back at it, y'all. We back at it. We are back at it. Oh no. Yo, what's up, my boy? Trying to get y'all right real quick. I don't want to look at no boring videos. I might just make a video myself, cause these videos be boring. The main part of everything is just all options trading is basically you putting in a option contract instead of a share, cause you'll make more off of the option. It's either a call or put. A call is better for it to go up, or put it for it to go down. I'm finna look at a video. I just edit a video on and lost it. Yeah, let's do this. Trade. You gonna mess with this one. You gonna mess with this one. The black dude.
What's up, YouTube? It's Chris Saint, and I'm just here to explain options in a simplified way. In today's example, I'm going to use Nike, but the game I give can be applied to any particular stock that trades options, okay? Okay, the first thing you want to do is hit trade, and then once trade pops up, guys, you want to hit trade options. Okay, this screen right here is your discover page. The numbers at the top is nothing more than your expiration date. The expiration date is just the date that you believe the stock will either go up or down based on what you chose, okay? And we'll jump into what you choose in just a second. But before we do that, let me give you some terms that you need to know before you get going on your journey. The number one term that you need to know, guys, is in the money. You might see it referred to as ITM. All it refers to is in the money. In the money simply means that you are in the money if the stock price is higher than the strike price at expiration. Long story short, guys, in the money means you're making money. Next one you need to know in your journey is ATM. That is at the money, okay? And at the money simply means you are at the money if the stock price is the same as the strike price at expiration, okay? And so, again, you're basically at break even if you're at the money, all right? And then the last one you need to know is out of the money, otherwise known as OTM, and that just means that you are out of the money if the stock price is below the strike price at expiration. So long story short, out of the money means you're losing money, okay? So listen, guys, you need to know and have close to you those 3 things, because that's going to determine how your trade goes. Alright, next you want to hit an expiration date. So for this example, we're going to choose September 18th. Right now you see what shows up on your screen is buy and sell. We just want to focus on buying and selling. Okay, you have 2 options when you trade options. You can buy or you can sell. Okay, so typically you want to buy something that you believe in, right? So in this particular case, you would buy a car. Alright, on the other end, you may sell something that you don't believe in, and so that particular case, you would sell a put. So long story short, guys, a car is a bet that you believe the stock price will go up. So using this example, Nike is $119 right now. A call would mean that we will bet that it will go up to 120 or higher. Okay, if we believe Nike would go down, sitting at $119, we would be placing a put. A put means we think Nike is going to go to 118, 117 or below. Okay, so nothing too extravagant, nothing too complex. You would buy a call and you would sell a put. That's all it simply means, okay? And if you stay within that range as you are beginners on your journey with trading options, you guys can limit and mitigate some of your risks, okay? For the sake of this video and for the sake of this example, let's quickly buy a car. So we believe if we're placing a call that we think Nike will go up from here, okay? And so I'm going to buy an in the money call, which is 120, okay? And if you see this, you see it's at 99 cents. Times everything by 100 to get your final cost, okay? And so the break even will be $120.99. That's where that 99 cent part come from. The break even means I would need to go up 1.8% from its current price to break even. So let's walk through this very quickly. If we wanted to make a call on Nike going up to 120, we would buy 1 contract, which gives us a total of $99, okay? It's that simple. So that's the skin in the game that you would have if you believe that Nike would go up to 120 or above. If it go above 120, you guys are going to make a killing, okay? That's just how the game go. If it goes below 120, because that's the strike price that you chose, then you would be losing money, alright? If we wanted to sell a put, the same thing applies, okay? If we click here at 118 and we bought 1 contract, you see right here, we would have a minimum credit of $79. On a put side, you would get this, okay? However, you would for 100 shares if it all went wrong, if it didn't go your way. But back to the basics, a put simply means that we believe from this point on 19, Nike will go down. Whether it's 117, 118, 116, or what have you. So just to bring everything back home for you guys, buying a car means you believe that the stock price will go up. Selling a put means that you believe the stock price will go down. I don't want to complicate this thing because all over YouTube, man, it seems way more complex than what it has to be. I'm just going to tell you guys, and I'm going to just encourage you guys just to do your due diligence. Make sure that you have studied the stock so that you know the way it moves and the way it fluctuates day to day in the market. Listen, man, I make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll see you guys in the next one.
Alright, Sean. Well, basically, literally what he said, it's as simple as that. You know, it's not too confusing. And, basically, you ban for the share price to go up or down. You know, it's just like that. You know, it's one way or the other. And then you just betting for a price. You know, it's a lot more stuff that get involved, so it's the price. You betting what price it'll go down, or your bet what price it'll go up to. So it'll be that too. And then also, you know, by what date. So it's 3 factors really, you know, that come into options, and we're betting against time. So that's the biggest thing. For the people that haven't already signed up for options trading, this is what you need to go do. And then I'll show y'all yeah. What you mean by what do you mean by that? Do you usually look at float usually before you make a trade? Alright, y'all. I'm finna show you how to trade options. So that's a lot of y'all, y'all don't know how to trade options. Some of y'all may know how to trade options, but y'all don't know how to. So when you go to the stock you want to and you click on trade, some of y'all may only see buy and sell. Because what it is, you have to sign up for options trading. So that'll be that. But I'll show y'all how to sign up for options trading. But it's just that simple. Options is only, it's literally you ban for the price to go up or down. A call is banning for it to go up. A put is banned for it to go down. It's just as simple as that. Y'all really making it harder than what it seems, but it's just as simple as that. You just gotta try it first, and then you'll probably understand. That's the biggest thing. Try it first.
Options trading on your Robinhood application. If you are brand new to Robinhood and you have never traded any stock on your account, I would suggest you to go ahead, find 5 stocks that are below $5 and buy 1 share in every single of those stocks and sell them next day, so you have some history of transactions on your account, so Robinhood can approve you to trade options right away. You can go buy 1 share of Macy's, or you can go ahead buy 1 share of Neo.
See, and with this right here, you don't even really gotta, buy any shares or nothing. And just when you sign up, when they ask you about experience, you want to put 1 to 2 years. So that's what you want to do. If you have it, you just want to put you have experience. You don't have to do all this other stuff, but.
Or you can go ahead and buy 1 share of Goodyear for $6 and sell them next day. And once you have 5-6 transactions on your account,
oh no, I don't usually look at that.
Investing, scroll it down. Here you will see options trading, enable options.
Usually, before I make a trade, the only things I really look at are my indicators, and I'm gonna really show y'all the indicators. Like, that's the biggest thing, But y'all gotta understand this option stuff, bro. Y'all gotta learn how to put it in first before y'all just try and do, the indicators, cause y'all just gonna, y'all not even gonna know what y'all looking at. I'll be honest with y'all, cause
more complicated.
I was doing it for about a year, and then I learned about the indicators.
Thanks for watching, and I'll see you guys in the next video.
But yeah, exactly what he did. All you want to do is just all you want to do is just go to your settings, and then you'll click on investing. And when you click on investing, you'll scroll down and it'll say get options trading. But right here, then I'll show y'all about the indicators, and this is basically how I know, this is basically how I know, when it's gonna go up, or when it's gonna fall. I know y'all be wondering how I know about that, and it's something you gotta get used to more of, because if you're not used to it, you're not gonna know what's gonna happen, because it can get real tricky, But basically, this is the biggest thing, and I use TradingView right here. I use TradingView for my indicators. And basically, I don't have any up right now, but I want to walk y'all through, this stuff, and I'm going to use SPY S&P 500 index to really, show y'all what trust fund, ETF trust fund. But yeah, I'm going to really show y'all, how I know what's going to happen. Just go back to YouTube. Trade. But basically, you have I'm going to tell y'all about an RSI first.
Technical analysis.
Okay, this is what it is. It's technical analysis. So I say indicators. It's called technical analysis. And that's how traders, know what's gonna happen. You know, and it's really not even knowing what's gonna happen. You making a prediction of what's gonna happen. So knowing 100% really, you know, knowing's 100%, but you know, it really just all depends. You know, the people that see the same thing over and over again, they're more likely to, you know, make gains. So those are people that are more likely to make gains than people that see the same thing over and over again. Because all stocks are is a pattern. You know, this happened back then, and it's most likely gonna happen again. You know.
Technical.
Yeah.
It's actually pretty simple. Essentially, it's a strategy an investor may use to examine an investment's chart and attempt to forecast its future performance. Some investors may use technical analysis to attempt to identify when to enter or exit a stock position. When performing technical analysis, investors can use a variety of techniques and tools to analyze a chart. In this video, we'll focus on a few technical analysis basics, including trend, support and resistance, price patterns, and technical indicators. Let's start with the first technique, trend. Trend is the general direction a stock's price is moving. There are three kinds of trends. Up, which is a series of higher highs and higher lows. Down, which is a series of lower highs and lower lows. And sideways, which has roughly equal highs and lows.
And
some investors determine...
when I say in the chat, you might hear me say it's trending. So, you know, right here, you're never just gonna see something just, you know, just pop straight up and just keep going straight up. It's gonna have like an upward movement, so, you know, it's gonna bounce up, come down, but bounce higher. You know, and it might come back down here, but it's always gonna bounce higher, so that's a trend up. And it's just the other way around for a trend down. And, you know, some stocks can just trend sideways and not do any type of movement.
Determine a stock's trend by identifying the direction of its highs and lows. Trend may be important because many investors believe that a stock will generally continue in the same direction it's been going. These investors would anticipate a stock with a strong uptrend to continue to rise, while one with a strong downtrend will continue to fall. Some investors draw lines to attempt to identify the trend. Investors can also draw lines to connect highs and lows. These lines are known as support and resistance levels. The next technique we'll discuss. Support and resistance are price levels that the stock has had trouble breaking through. If a stock breaks through support or resistance, it could be a signal to enter or exit. For example, suppose a stock breaks through resistance, which is a level it repeatedly pulled back from in the past. Because it broke through resistance, an investor may believe that there's a good chance that the stock will continue to rise. So, broken resistance may be a good time to enter. On the other hand, if the stock fell past a support area, it may continue to fall. This could be considered a good time to exit. After connecting support and resistance levels, a stock's price movement may resemble a certain shape. These shapes are called price patterns and are another technical analysis technique. Price patterns can build on support and resistance, allowing investors to attempt to predict more specific movements and try to point out even more precise entry and exit signals. There are many different price patterns. Some examples include simple shapes like triangles or flags, and more complex patterns like head and shoulders or triple tops. Let's look at an example. This is called an ascending triangle, and it forms when a stock's highs are hitting resistance, while its lows are steadily rising. Some investors might interpret the narrowing between the highs and lows as a signal that the stock's about to break through resistance. If it does, the stock's price is expected to rise in value right after the breakout. But not all investors exclusively use support and resistance and price patterns. Drawing lines and finding shapes can be subjective. Because of this, some investors may use technical indicators. Technical indicators are graphical representations of chart data. Each indicator displays chart data, like price and volume, in a unique way, giving investors another perspective of the stock's performance. Because technical indicators are created using formulas and data, they may give investors a more objective way to examine a stock's performance. The common technical indicator is a moving average line. This indicator averages the stock's price over a period of time and plots it as a line, which can help determine the overall trend. Moving averages can be calculated for any period of time, but one of the most common is 50 days. So what does a moving average tell you about an investment? Imagine a stock's price crosses above its 50-day moving average. This may indicate that the stock is outperforming its recent history. This could be an entry signal. Similarly, if the stock begins to fall and dips below its moving average, it could be an exit signal. Moving average lines are only one of many technical indicators investors may use. Other common indicators include price envelopes, Bollinger Bands, stochastic oscillators, and the relative strength index. At this point, we've covered some basics of technical analysis. One thing to keep in mind is that technical analysis can help you identify potential entry and exit signals, but it offers no guarantee of success. After all, there is no way to predict the future. We've only covered the tip of the technical analysis iceberg. Learning how to use the techniques and tools we've discussed, as well as the many others out there, can advance your technical analysis skills.
And that's that. So basically the one I used the most, or the one I started using the most, was the RSI. So RSI is a relative strength index, and basically all it is, it tells me if my price is oversold or if it's overbought. Alright. So with oversold, so let's go back to, let's do a 4-hour chart. So I'll go on my 4-hour chart. So basically this how it is. So my RSI is right here. This is my indicator right here. So this is my indicator right here. This is my RSI. So basically oversold is when this purple line right here goes below this white dotted line right here, and it's oversold. And if something's oversold, it always has to pop back up. So it's a signal for me to, buy. And then so when the purple line gets down to the bottom right here, I tell myself, oh, I need to buy. So that's what I end up doing. But this is oversold. So when something's oversold, you have a buy entry. And then when something gets overbought, it's another word, overbought. So overbought means something's too overbought, or it's overvalued basically. So basically when something's overbought, it has to drop back down. So it's basically the opposite of oversold. So it's more, if this purple line goes above my dotted line right here, that means it's finna get ready to drop back down. And basically I'll go off, I'm still right here, so I'll just show y'all, kinda, what I do if I see my price overbought. So right here I'll be looking at my chart right here, and I'll say, it's getting overbought, so I tell y'all to put in a put. So it's more, I tell y'all to put in a put on spot, cause it's overbought. And when I tell y'all to put in a put, you basically just predicting that, you basically predicting what's gonna happen in the future. So if I tell y'all to put in a put, I'm thinking it's gonna drop. I'm thinking it's gonna drop because my price is overbought, and the reason I can tell my price is overbought is my relative strength indicator. And it's over my dotted line. This purple line is over my dotted line. So what I do a put, and you'll see right here, it gets to the top. My share price gets to the top, and right here, this one starts to drop right here. So you'll see this one starts to drop right here. This one starts to drop right here. You're making money off. It just dropped $8. You're making money off of it dropping. So that'll be that. And then we'll keep holding until we get oversold. So right here is oversold. So this is when I tell y'all to get out that put right here. So when I see my dotted line all the way at the bottom, that purple line all the way at the bottom below this dotted line, this is when I tell y'all to get out the put. So that would be that. Okay, overbought is over the white line. So overbought is over the dotted white line. So this dotted white line at the top, this is overbought. So this purple line, this purple line is basically resembling this actual share price. That's what it's doing. It's resembling the actual share price. All y'all see is this chart. Y'all don't see nothing but this right here. So that's why I say y'all don't see nothing but this on Robinhood. Y'all don't know what's happening. Y'all just see the chart. If y'all see something go up, oh, y'all gonna think it's just gonna keep going up. It don't work like that. You know, when you pull up your indicators, you see more information. You start to see, you know, what's actually happening. So right here, we got overbought. Right here, we got overbought. Right here, we're overbought because it's over this dotted line. It's this dashed line at the top right here. So right here, this dashed line at the top right here. You see it? That dashed line at the top. My purple line goes above it, and that's when I'm overbought right here. So then I'll tell y'all to put, if we're overbought, okay, if we're overbought, it has to drop down. The only thing I tell y'all to do is put in a put. You know, if you think it's going to go down, you put in a put if you think it's going to go down. So basically from right here, I'll tell y'all to put in a put. When y'all put in a put, y'all start making money off the put because it keeps dropping. You know, it's literally, you just predicting what's going to happen. You just predicting what's going to happen. That's all it is. So right here, you know, it keeps dropping, you know, it's at 353 right here. And it keeps dropping for about, I say about 10 days. Keeps dropping for about 10 days. We're at 325 now. You know, you make a 400-500% return, however much you make off those puts that you put in. You know, then we get to the bottom right here. Once we're at the bottom, it's oversold. So if something's oversold, it has to go back up. So that's what it is. If something's oversold, it has to go back up. That's the only way. It has to go back up. It can't keep dropping below this line. It has to go back up. So right here, we'll put in the buy entry. But it doesn't actually start going up till right here. It doesn't start turning up to right here. And that's the only flaw. It's flaws in every indicator. You have to match them with other indicators. And I'll really show y'all. This is just one indicator out of the 6 or 7 I use. But I just want to walk y'all through one by one. You know. But down here, it's oversold. So oversold, we're thinking it has to go back up. If something's oversold, it has to go back up. If something's overbought, it has to go down. So that's that. And right here, I tell y'all to put in a call bet for it to go up. And we're at 3.24 right here. You know, in the next few days, you know, we get to 363 then. You know, you make money off of that, you know, because we bet it for it to go up. So that would be that. So that's just what my RSI is, you know. It's telling me if my price is overbought or oversold. So right here you'll see, you know, it just keeps going up. We get overbought right here. It drops back down below my dotted line. But what probably happened right here, you know, we have moving averages. Like I said, every indicator has a flaw, so you have to match it with another indicator. So it's a moving average. And basically our moving average, our share price has to bounce up off the moving average to keep going higher. So right here, you know, it might be our 20-day moving average. Let's see, 20-day. I just know it's a moving average that it went up off of. It just can't, you know, go up. And I use exponential too. So right here, y'all see it. My 9-day moving average. Y'all see that line right here, my blue line. Well, I changed the color for y'all, so y'all don't be so confused. I do a green line. I do a green line for y'all. So y'all see this green line? My share price has to keep bouncing. So right here we have it overbought, but it drops down. But when it drops down, like I said, it has to, for our share price to go up, it has to bounce up off a moving average, and our moving average is the green line, so it bounced right up off this moving average. And I just knew it was a moving average because that's just what it is. So right here you'll see it keep going up, it'll drop back down, hit the moving average, pop back up. Right here, it hits the moving average, pops back up. Right here, hits the moving average, pops back up, you know. And it's just repetitive. So really what I recommend, Robinhood is just more easier. So Robinhood, you know, you'll get a better understanding, so it can prepare you for, you know, TD Ameritrade, like with the limit price. Like you'll start seeing like limit price. You won't understand TD Ameritrade first starting off, you know, because I was doing options on Robinhood and I went over to TD Ameritrade and I didn't know what I was looking at, you know. But Robinhood is better. TD Ameritrade is just for y'all to learn more of. You know, that's really the only reason I use TD Ameritrade. That's for learning. So with TD Ameritrade, I really recommend y'all make an account and y'all look at the education on there. Look at every video. It has stuff about options, stocks, the trending, you know, all of that. But basically, yeah, with our RSI. And this is just what I wanted to show y'all, how I look at my indicators with my RSI. And right here you see, you know, right here it starts to go up and we're super overbought. So when we're super overbought, it has to drop back down. So right at this point right here, I would tell y'all to put in a put. And when I put in a put right here, you make money off it going all the way down. And that's just how that is. And I'll show y'all what mRNA did. So mRNA, that's what we were in on Friday. And this why I don't really recommend, you know, sometimes I don't recommend, you know, holding, you know. So right here we're too overbought on mRNA. It's way overbought on mRNA. So if it dropped tomorrow, I wouldn't be surprised. But the only thing that can push it higher really is, you know, news. That's the only thing that can really push it higher is news, you know. And that's my 4-hour chart, and this is just my RSI. I use TradingView and look at my indicators, and right here I have my RSI, and I add my indicators. Right here it says indicators. I press on it and I type in RSI. You know, if y'all want to use that so y'all can know if something's oversold or overbought, y'all can. You know, that's just like, y'all don't want to rely on me. You know, y'all don't want to rely on me to tell y'all when to buy or sell. Y'all want to, you know, use me so y'all can get used to it, you know, and start making your own trades. But you'll still want to make my trades because basically I've been looking at it. I've been doing this for a longer time period. So I, you know, be more profitable on trades and stuff. So yeah, right here on mRNA, we're too overbought and it's going to get ready to drop. I wouldn't be surprised if it dropped, but if it keeps going up, it can keep going up just because it's trending so hard. But that's my RSI right here, just telling me if I'm oversold at the bottom. Right here, we were oversold. Y'all see it. We're overbought up here. And we're overbought up here as well, but it came back down. But that's that, and I'll just let y'all look at a little video of, you know, this.
Let's examine how to calculate the Relative Strength Index, or the RSI.
First, identify a previous time period to use. A time period is generally 14 days, but can be shorter or longer. Next, add up the average gains and divide by the average losses during your chosen time period. The calculation solution, or value, is referred to as relative strength. The relative strength value is then plotted on a graph between 0 and 100. Plotting a line helps investors measure momentum in relative terms, which means looking at the indicator's current value in relation to past values. This comparison may make it easier to identify when a stock might reverse its prevailing trend. To identify potential trend changes, there are two ranges of the indicator to keep in mind: overbought and oversold. Overbought refers to a stock that has increased rapidly in a short period of time and may reverse lower. Conversely, oversold refers to a stock that has decreased sharply in a short period of time and may reverse higher. Now that you know how to calculate RSI and how it measures momentum, let's look at how investors might use this indicator to identify potential trading signals. Some investors define oversold as an RSI value below 30. When RSI crosses back above 30, it generates a potential bullish entry signal. Exit signals work the same way, except investors use overbought values. An overbought value is an RSI value above 70. When RSI crosses back below 70, it generates a potential exit signal.
Yeah, that was just a quick short video of, you know, what RSI is. And it's basically just telling you, you know, my buy signals and
By
my,
the end of this video, you'll have a very solid understanding of how to use.
yeah, my buy signals, and right here, you should be exiting this trade right here. I would not get in this unless it dropped below my dotted line, you know. And really, it should touch a moving average first. So tomorrow morning, we would see about 118, if anything. But let's look at what else do I use. I use a commodity channel index. So my commodity channel index is my other indicator. So my commodity channel index is my other indicator I use, and basically, instead of me, I follow my share price with my RSI, so I can look at if it's gonna go down on my RSI. So I follow my share price with my RSI, but I follow my RSI with my CCI, and basically my CCI tells me if my RSI chart is oversold or overbought. So that's what that is. So basically it tells me if my RSI is oversold or overbought. So I use my RSI to tell if my share price is oversold or overbought, but I use my CCI to check if my RSI is oversold or overbought. And basically that just gives me more information on, you know, that the overall share price. So all of these charts are in line within this share price right here. This share price for mRNA. You know, I'm gonna go back to SPY for y'all. Actually, mRNA may be a better chart to look at. So basically, right here, I'll show y'all. Right here at my share price, you can't tell on the RSI that it's oversold because it's not below my dotted line. So what I do is I always check my CCI to see if my CCI is oversold. And right here you can see where this isn't oversold right here, but right here we see it's oversold. So it has to go back up, you know. But basically we're oversold right here on the share price. So basically this has to go back up. So what I do is this would be a entry, but it's more short term. So we use a CCI for more short term. We use a CCI for more short term, and what happened right here, we'll do a call, and this is more like we're on a 4-hour chart. So this is in I think 2 days or a day. This should be a day. So this line, from this line to this line to this line, that's a whole day. So basically this whole day it went up right here. So basically right here, if I put in a buy signal and held to the end of the day, we would have made money off of that. So yeah, so this is oversold right here. So basically what I do, I put in the call right here. When I put in the call for that day, at the end of the day, we'll make our money. We'll make our money. We'll either take profit or wait till the next day. But right here you see where we went overbought. It doesn't look overbought. It doesn't look overbought on the share price, or it doesn't look overbought on our RSI. But when we look at our CCI right here, our CCI is overbought, so I had to drop back down. When it dropped back down, it came back right here. We're oversold again because it touched our dotted line. So we're oversold again because it touched our dotted line. And basically I do a bot entry right here, a call right here, because I know it has to go up. So basically all it is you basically all this is, you know, you betting for it to go up or go down, you know. That's all you're doing with options, you know, with shares, anything you do, you betting for it to go up or go down. You basically trying to predict what's going to happen the next day or the next hour so you can make money. That's all you're doing. So this is my CCI. I'm following my CCI with my RSI. Alright. And then the next indicator I use is a MACD. So our MACD right here. So we have our MACD right here. And I'll just show you what a CCI is. So, let's see. TD Ameritrade may have a video. I don't know, TD Ameritrade just be having better videos than me. I can't even see. Yeah, I can't even see on here, but basically that's what it is. But our MACD indicator, I'll show y'all that one next, what I use. And basically with our MACD, all we're checking is momentum. So that's all we're checking right here is momentum. So we see right here, this is our peak right here. And basically these green bars right here is for momentum to go up. So it still has momentum to go up. But as soon as this, so we have momentum for it to go up right here. So you'll see it right here. We'll make one green bar, two green bars. So after that, we're predicting that, you know, it's gonna go up even higher, you know, because our momentum just keeps rising right here. So what we'll do, we'll put an entry in for a call, you know, and make money off the call. And basically when the momentum gets too high, so right here may be, you know, as high as it'll get. So momentum get too high and you'll see a, let's see, let's look at this. So you'll see momentum will get too high right here. Momentum will get too high. And then we'll see a lighter green bar. So a lighter green bar is lesser momentum for it to go up. So it's more likely to go down. And these two lines right here are just my moving averages. And basically right here, when this blue line gets too high above my, let's see, let's be more specific. So 9 and 12. So you have a, let's see. Okay, we have a 9-day moving average, and then we have a 12-day moving average just right here. So basically, I'm gonna show you those other lines. So basically, right here, let's see. We're gonna do it right here. We're gonna do that one right there. So basically, when this, my 9-day moving average goes too high above my 12-day moving average, it has to cross back down. And when it crosses back down, it gives a downtrend signal right here. So when this crosses down, it gives a downtrend signal. I'll just show you the share price for that. So right here, we have the share price right here. And then we have our signal right here. And it's starting to downtrend. So basically when it starts to downtrend, our share price will continue to drop. This will continue to drop. And basically we get momentum for it to keep going down, and then we'll see this red bar right here. Momentum for it to go down and stop. Momentum for it to go down will stop. And then we have momentum for it to go back up. Because the momentum for it to go back down is less, because we're having a lighter red bar. That's what a lighter red bar is. Momentum for it to go down is less. So a lighter red bar is that. And then right here, this is when you see this red bar I was showing y'all right here. We'll put in we'll enter into a call and bet for it to go up, because the momentum for it to go down is less, because we see this lighter red bar right here, and then we bet for it to go up. And then when we put in a cost, and then we make money off of it going up from right here. So that's the other indicator I use. But yeah, this is just the setup I use for everything, really. So this is what I end up starting with, and there's a lot more indicators. It's just, you know, off of your preference, which one would you use, which one will help you, you know, predict what's going to happen in the future. That's all that is. Yeah, that should be it. But yeah, that's it for that. And then I'll send more videos in the chat.